welcome. We are very grateful that you came. The purpose is that you guys leave here with information that you say, I'm so glad we went. Sometimes that doesn't happen. You're going to help me with your questions to make sure what you came to get, you say, that makes a lot of sense. Because we're not going to talk about just the black and white numbers, how to. We're going to talk about specifically here in Wasatch County, because there's a lot of prices are going up, lots of things going on. How do we handle it? How do we do certain things? So I want to make sure that you leave here going, okay, I've got some answers for my own self, okay? Making home ownership possible. So we're going to talk about home ownership, we're going to talk about budgeting, the home buying process, financing options, and then because I'm throwing it, I'm going to ask the question, why guild? Okay? So home ownership benefits. I'm just going to read with you for a second. So renting versus buying. I do want to say a quick statement that it depends. There's a timing to this question because someone says, I hate wasting rent. I hate the fact that I'm just throwing it down the tube. And that's true. But if you don't buy your house right, timing-wise, closing costs, rates, all the variables, then you could buy a home and unfortunately the home, the dream becomes a nightmare because it ends up being something that you can't afford, okay? So sometimes renting timing-wise is okay for that period of time, and we'll make a plan, okay? But renting, every rent payment builds your landlord's equity. That's true. That's true, so you don't get it. No tax benefits. Landlord controls repairs and upgrades. It's interesting because we're going to talk about subjective and objective stuff. Because every time it comes to numbers, you do talk about objective things. You know, what's the math of it? But buying a home, living there is very subjective. So the fact that I get to put the picture on the wall if I want to. I hear that phrase all the time. And then rent typically increases every year. It may or may not, but it can. And that's also a big thing here in Wasatch County, in case you haven't experienced it, that the rent increases, and it's actually at maybe a faster rate than payments are. Now, owning it, every mortgage payment builds your equity. And if needed, your equity can be tapped in a home equity loan for future. It becomes a tool, if used correctly, that you can use that equity to borrow against, whether to repair your home or do other things. Tax benefits, as a homeowner, you can deduct the mortgage interest and property taxes from your income. And then we always have to have a statement, make sure you talk to your accountant. Make your space your own. Again, I put the picture if I want, I can plant a tree if I want, I can do what I want. And fixed mortgage payments remain the same over time. You don't have to worry about, hey, I signed a one-year lease, what's the guy going to do to me? So again, this is very heavy to say, hey, don't rent anymore, you should buy. And I firmly believe that, but I also believe that the most important decision is your capital, meaning, what do I pay that first time around? What is it I'm doing to make sure that's a wise and prudent decision? Budgeting. Now I'm going to tell you my personal opinion on this. Now I say that way to try to make a point, because if you go to Dave Ramsey, he's going to say, be as conservative as possible. Make sure you don't spend anything ever. Now, excuse me to him because that's not necessarily what he says, but it's close. But it's close. I personally say absolutely. Let's make sure we spend our money smart. But I've learned that if you're most conservative, you're never wrong. But it doesn't mean you're always doing what's best. Okay? So if you're most conservative, I'll be honest with you, if you're just saying, okay, I will not pay more than $800 a month. That's wonderful. You probably won't find a place in Wasatch County. So can we buy a place that maybe is a little more expensive, but is a good opportunity and make sure it works for you? So there's some balance there. Tracking your past expenses, review your credit card debt. Obviously credit card debt is kind of one that you have to make sure of because interest rates are higher, those kind of things. We will talk about credit, but how to manage that well. It isn't just about late payments. Create a budget. Now, just so you know, this is not part of the qualifying process. I don't require it. It's just a suggestion that we say. I will tell you the question I ask every time, because someone comes and asks, hey, what do I qualify for? That's what I want to know from you, Tom, in Guild Mortgage. And I say, that's great. But I always turn it and I say, what's your comfort level? Have you sat down with your budget and said, our maximum payment we think we could afford would be, and you fill in the blank. Lots of times they say, we don't know. And if they don't know, I say, I suggest that, but I say, how much do you pay for rent? And how much do you have as what you would call disposable income? And then what are your potential increases in payment? In income, in income. And you can add those together and say, okay, I have some room. The other thing I recommend for people is make a mortgage payment for a period of time. If it's going to be if you're paying a rent of $1,200 and your new payment might be $1,600, pay a $1,600 payment to yourself for a while. Put it in a savings account. Pay your $1,200 rent and put $400 in a savings account. And don't touch it. That's some good advice that I've heard. Include regular savings, that's kind of what I just said, hybrid, and plan for future expenses. The one thing about a home, again, what you're going to hear from us, or me tonight, is that yes, it's a good equity position. Yes, you have all these benefits, but realize that when you own a home, you really can't tap it unless you borrow money against it. So then it actually is a situation where you have to manage that better, but it's actually an expense. Owning a home is an expense because, hey, you know what, this broke and those things. So you have to plan accordingly, saying, hey, if I snuck in barely to afford this home, and then, hey, by the way, the sink broke, or the shower, this or that, you just want to have a budget line that's just in case stuff. In fact, in my budget, the miscellaneous category is usually the biggest one. How much can I afford? So let's talk a little bit about that. I've talked at you, let's talk about that for a second. How much can I afford? So if I was to ask you that question, give me some feedback, those of you here. How much can you afford? Now I'm not talking real numbers because that's personal information, but I want to understand how you feel about that. So let's go through that real quick. How much, and I've already said this a little bit, but how much do you spend on housing? And if you want to give me just a variation, you know, rent is about what? Give me a ballpark number.
For my family, it would be about $1,800.
So $1,800 a month.
Not that we can afford that.
But in Heber, rents are expensive.
Yeah.
Is that an okay number? Is $1,800 a number you want to use for this scenario? Is that okay?
I pay a lot less, so yes, we can use that.
Tell me where you're at. Just give it a look
We
at
live across from Wasatch North Campus.
Rent from our father-in-law.
Yeah, so we have,
You got a good vision there.
we have a pretty good deal.
And that's good. And you know what? Let's be honest with this. You know, if we have a good situation where someone's giving us a family discount, should you buy? Should they? Should someone buy? If someone's got a family discount, a good deal, and they're paying in Heber, they're paying. We're not going to disclose you, but let's call it $1,000 a month versus $1,800. Should someone go buy a house and pay $1,800 a month? Let's say that's their mortgage payment instead of rent, okay? Instead of $1,000 rent. So you're going to increase your monthly expenses by $800 or maybe more, depending on how much you want. Would we say that's a good financial decision?
If
Go
you're
ahead.
financially ready.
If you're financially ready. Okay, we got a nod back here. Are you nodding yes?
Yeah.
Tell me what you're thinking about that. Because why?
I think that investing in equity or real estate is the best investment for long term.
So you maybe bite the bullet up front.
Yeah, I think that up front it sounds rough, but over a period of time, real estate goes up and your rent just goes away, always.
Heather.
I had an experience with somebody that I met at the Home and Garden Show this spring. They were about 50 years old, and their last kid was getting ready to move out of the house. They had never bit the bullet and bought a home, and they were telling me their story, just said they always felt like they were waiting for the market to change, or waiting for this, or waiting for that, or whatever. And at this point in their life now, at 50, they would really like to have a home, but they had no equity in anything. And they said, you know, it's really hard to save up that big chunk of money that they said, had we bought a home when we first got married, even if it would have been small, we could have built up the equity and bought a different home and this and that. And I hadn't known anyone who hadn't owned a home at that age. And it really kind of struck a chord with me. I thought, wow, I felt really bad for them because they were really in a predicament because they were trying to move back into Utah and just couldn't come back in because they didn't have any equity to sell another house and buy another one. So
Sure.
that was a
Thank you.
little lesson for me.
Please.
Well, just think, like you said, home is an investment. So if you're gonna do it in somewhere paying less rent than you would somewhere else, pay the difference for a couple months or so. But the sooner you're able to get when it's lower, the better it is for you.
True.
So, but you have to make sure it's an investment, not going over the head. You know?
Right.
So-
Yeah, we don't just buy to buy. I think it's a good point to make.
I
Please.
think too, it has to do with maybe peace of mind, because
Like, we have 5 kids, they run all over the place in a little apartment. And so it'd be better to pay a little bit more and just have a space they can kind of free for all.
That's where we're at. We live at my dad's house and have 3 kids running around. It'd be nice to have
Sure.
our own home, our own
Appreciate
place.
Good points. Good points. Thank you. Reagan, any points you would make on that?
No.
Let's go on. Tips to get started. Now, this is obviously self, if you want to go do it yourself. If you want me or someone like me to do it, we can do it with you. I would recommend that. Because even your DIY, your do-it-yourself, and your YouTubing, and you do all these things, there's always those little things that are different in the place that you're at. And there's timing to it too. And if you have a YouTube video that teaches you something about how to fix something, that's going to be pretty it's going to be okay from 1999 to whatever. But buying a home changes almost every month. I can literally tell you that I remember it was almost so drastic. It happens every year, but the market goes crazy, and then there's like an hour that it stops. Like August 26th at 2:13, my phone stopped. I'm not kidding. I was like, hey, it's been like an hour since, did we just hit, and then 2 days, oh, okay, I guess we had it. And that sounds funny, and you don't really know it's coming, but at this point, I've done this 24 years now, I can start sensing it. And I'm pretty good at guessing. Generally speaking, it's going to start slowing down about this time and kind of pick up. Mike, what's your comment on that? What have you seen? So Mike closes a lot of deals. What are your thoughts on timing and someone trying to pick the right time?
Well, you definitely take that into consideration, and it is surprising how fast things change. For all the 2000s, we were flying, and I thought I'd done everything as well as I could to prepare. And in 2008, in the third quarter, my phone stopped ringing and didn't pick up for 5 years. And it was, I've never seen anything like it. It was just like immediately everything was down. You couldn't see it. I've never seen anything like it.
Tell me how it picked up. Tell us how it picked up.
Well,
What'd you see happen?
in about 2012, it started to come back a little bit, and it's, and you start to see things traditionally the way that they had been, but then it was, by the end of 2013 and definitely into 2014, we're sprinting again. And everything's sprinting, and I think everyone in this room has seen it, where prices really started to run and start to go up and start to really, but that's it, you kind of want to catch things at the right time. That, if you're looking for it to be an investment, you want to catch it at the right time. I bought something in St. George in 2009. That shows you how not good at this you can be if you're not always careful.
Why did you buy in 2009?
I thought that it would be over. I thought that we would hit the end in 2009 because everything had been quiet for over a year, and I'd never experienced anything that long before.
So that's a great piece to understand, is that by no means can we really guess. In fact, I'll tell you, we have a guy that works at my company, Jewel Mortgage, that I don't know what he gets paid, but I'm going to tell you, it's a whole lot of money. Because he knows all these fancy things, and he controls our interest rates and manages stuff. He's just the most brilliant person I've ever met. And he has said, after 3 hours of listening to this guy and talking about the market and this and the numbers, and it's just fascinating stuff, he says, but don't you believe anybody if they say they can tell you what's going to happen. Okay? And that means more on an everyday basis. You can kind of have a general feel, like I was talking about. You can kind of see trends happening. But if someone says from one day to the next, or even stuff, you can't. He said everything's 50-50 when it comes to that. Now, I don't know if I gave you any answers there. You'll hear, by the way, engineers hate people like me, because engineers always come in with their graph paper and they want to know exactly what the answers are. And I usually give well, it kind of depends. And they're like, give me the calculations. And I say, well, it kind of depends. Because it is based on what you feel and what the market's doing and all these kind of things. The rates change every day and so forth. So anyway, I just want to go through that. Let's see. Double check your credit report. I will tell you on credit reports that your credit card, for example, they're doing scores for you now. There's Credit Karmas and there's free credit reports. All those things have good data, correct data, but they do not have the same scoring model as we look at. So when people say, hey, this is my credit score, 9 times out of 10 it is not the same one that I pull. So just be careful. If you want to really know what's going on, you want to sit down with me. And let's pull your credit. And also, for example, when you go maybe to a car dealership, they're going to pull one of the 3 repositories. And one will tell a story, but sometimes there's TransUnion that shows this, and Experian or Equifax that shows one different thing or another. And so we show all three. And so there are times when you say, hey, we look good, I went and bought a car, and they said I had good credit, which is true, but then maybe a collection showed up on TransUnion that didn't show up on the rest of them, and that tanked that one score. So I always tell people, come in, let's talk. If you're not even ready, that's fine. I love it when people come and say, we're not even close to being ready. Can I come talk to you? Yes. Let's sit down and chat. Let's make sure we understand your credit report and your situation. Explore all down payment options. So again, you have to pick. I call it whack-a-mole, like in the old carnivals where you hit it and it pops up. So if you want a no down payment, usually it's a higher interest rate, or usually there's some mortgage insurance or different things, and that's not always the case, because there's some really cool products out there. But you want to make sure if no down is your most important thing, then we analyze what other things might be second important, third important, and so forth. Get pre-approved, that's where I'd say come talk to me. And then you hire a real estate agent. If I may, in the room of real estate agents, talk about that for a second. There's some timing to that. What happens is, because you can go look at any home online real quick with the Zillows and the Trulias and the Realtor.coms and stuff, you can start looking at houses and people say, I've been looking, and you drive around, kind of do your own thing, and you get excited about it. And so you call the realtor and say, hey, tell me about this house. And that realtor's excited to represent you, and they say, let's go look at it. And then you get all emotionally attached and you're excited. And then you call the mortgage person and they go, oh, let's sit down and talk numbers. And we're not quite qualified. The risk of that is that the purchase has now become emotional. And an emotional purchase is not always the best for you over a 30-year time frame. So getting pre-approved, sitting down and doing the logical part, I know it sounds like the parent, but sitting down and saying, hey, let's see where we're at logically, financially, how do you feel about it, what's your payment right now? And actually look at the number. What's my monthly payment that I feel I can afford? I also say that. Let's make sure we go with monthly payment instead of sales price. People say, I can afford $300,000. Well, how come? How do you know? Maybe the down payment situation or the FHA or the USDA or the blah, 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 blah would actually make it so your payment, oh, you mean it'd be that? Or maybe it'd be more. So I always say, let's analyze monthly payment, because that's what comes out of your checking account every month for 360 times. Whether it's $299 or $362 or whatever it is, we can, not that we manipulate numbers, but there are different ways to look at it, and I always go monthly payment and then go backwards to sales price. Is that okay, realtors, to say that?
Yeah, I
Mary
have
Ann?
a little something to add.
Please.
I know a number of clients that I've worked with have felt comfortable or confident as well in a relationship with a realtor. So if you already have one, and having them participate in this process with you. So if you find yourself that you've called someone and you feel comfortable with them, it's okay for us to go together or to figure it out together. And it's important that you know that monthly amount. And don't push it so much, because if you're patient, we'll help you get there. So don't just go out and say, oh yeah, but now I really want to spend this much. Because we're going to send you what's within that budget and within that limit. And then all of a sudden, if you go looking on your own, then you're going to end up in this situation that you're falling in love with a house that you can't get. Right. But we love to work hand in hand with our mortgage people, and I know you guys need that. So.
I just want to say, I think it's, as much as we want to talk to you guys all right away, it's really important that you talk to Tom or another lender, preferably Tom.
Tom.
But if you know what I mean, that you get that financial piece, because it's really easy to walk into a house and fall in love with it and then go sit down with Tom and realize you can't afford that. So to get that piece, and then you're not looking at things that you can't afford, because house envy is a little hard. I have it. I mean, I'm as guilty as the next person. So like that financial piece is really the most important piece right up front.
Keith. And also, in the market right now, it's very competitive. And if you don't have that piece of paper from Tom saying that this is what we can do, and you love that house, by the time you go back to get that piece of paper from Tom, there's probably going to be another offer on it, so you better be ready.
If you're credit approved with me, you're going to cut the time almost in half. And you can actually act almost like a cash buyer in a sense, because we just have a few last steps. So that's a great point, Heath, that if you are in competition in a market like this, you want to have that well underway. You know what you're doing, you know you're comfortable. Boom, let's jump on as fast as we can. Because a lot of people, they say, you know, hey, don't push me into a situation that's so big. Right. But if we've been preparing and you know what house you're looking for, the realtor now knows, hey, I want this style and this price range. It pops up. Because again, if you have a really good realtor working for you, they actually know from all of their years experience or people they've known that they sold a house to them 3 or 4 or 5 years ago and now they're selling it. And they've called them. So they know a house is for sale before it even goes on the market. And they can say, hey, real quick, that house is probably a good one for you. And they can look at it before it goes on the market the next day. And that's not cheating, right?
No,
That's
totally not.
So having a real connection and having that team. Here's my other first-time homebuyer speech that I give. You ready? You are in charge. We work for you. I understand that you may not have all the knowledge or the experience or the connections, but always remember we work for you. That doesn't mean that you treat us bad or poor, but that you're in charge. And so as we give you empowerment and education and information and make the wise decisions for you, then you can tell us exactly what you want. Sometimes it's the other way around, especially if you're in a hurry. That you just say, I guess I'm going to do it, the realtor's doing it for me, I guess I got approved. And then they're like, I say, well, how did you get someone else? How did you get there? I don't really know. What's your interest rate? I'm not sure. I don't want that.
And it's important to know those details.
So meet your team. We've kind of been, I love it because we're talking about things before it even comes, but by the way, this only lets me put my picture on there, and I know it looks like what it looks like, I guess.
This is
Right?
This is Tom's moment.
Just a moment. All right.
Okay.
So again, me and my team, there's actually 5 of us in my office that do different things. But we sit down and do these variable things. Bree again would sit down and play your credit with you, those kind of things. Real estate professional, escrow, title company, insurance agent, home inspector, and the appraiser. So I want to just turn, I asked Mike to come specifically for this time. So it's really kind of in there, they see the real estate agent. It's like they're all over the place. Advertising, I like you though, I love seeing it, it's great. And the mortgage person, they see those people a lot, but they don't see you till the end. So a title guy, escrow title, just take a few moments and explain to us title and escrow and how it
You
works.
want me up there or just right here?
Come on.
I have one joke, I actually have a bunch of them. But I will tell you this, there's never been a kid in the history of the world in 4th grade that says, you know, when they ask, what do you want to be when you grow up, they say a title guy. Because nobody knows what we do. I didn't know, in fact, I even worked in the industry for a while, as in a title office, and I still didn't know what I was doing for about 3 years. But it's really, really simple. These are huge amounts of money. Whether it's a starter home, you know, which I would have said 20 years ago was $100,000, and now I'll say is $300,000 or $400,000, or if it is a commercial building like this one. I mean, it's a ton of money that we're all dealing with. And there is a ton of money at stake as well. There's a lot of money at stake for your real estate agent. There's a lot of money at stake for your lender. There is a ton of money for the seller and the buyer. And so in other states, if you go east of the Mississippi, my job is done by an attorney. West of the Mississippi, in almost every single state, they have title companies. And what title companies do is we are a fiduciary, which means that we work on instructions for everyone, and we're the neutral third party. So I will sit through and go through all the loan documents with you and say, Tom has told you every single thing about your loan, or Bree has told you everything about your loan, and then I go through it with you and say, this is exactly what you're getting, because I have no interest in it. I'll sit down and I go through all of the money, and we handle all of the money too. Interestingly enough, for somebody that you see for 30 minutes in the whole real estate process, I handle all of the money for the buyer and the seller. I make sure that as a buyer, you're getting exactly what you think you're getting. That is one of our huge responsibilities. At the very beginning, we issue what's called a title report that says, this is everything that we can find in the public records about your property. How big the lot is, where it sits, if there's easements, if there's right-of-ways, how much money the seller is dealing with. If the sellers are dealing with a divorce, and we need to make sure that happens. All of these little steps. So when you take title to it, and you start making those 360 payments, you know that you're making 360 payments to something that is yours. In fact, I actually insure it. So I'm an insurance company on one end, and then I'm this fiduciary on the other. We actually play 2 roles. In a lot of other states, my company would be split into 2. We'd have an escrow company and a title insurance company, and they're actually separate. But our full job, as easy as I can put it, is to make sure that it is a very, very comfortable process for you. You know what you're getting yourself into, and you know what you're getting, and that you can use the property exactly the way that you had. And today's a perfect example. I had a gentleman call me and he said, hey, my dad sold this piece of property, And he said that they're telling us that Dad had said there's some deed restrictions that go in there, so they can't build this kind of house and everything. And they're driving across our property, and there's not an easement. This property was sold in 1991. I went through and I did the history, and I said, I hate to tell the son this, but that deed restriction expired after 10 years. They can build anything they want. They can subdivide it. They can do anything. And there is a 60-foot right-of-way that they can use to drive across your property. 60 feet. This room's 20 feet. 3 of them. And now all of a sudden you're telling somebody that their property is considerably different than what they thought it was going to be. So that's my job. Anything you'd like me to add, Tom?
Any
or
questions,
any
Mike?
questions that anyone else would have?
This is
I'm gonna
more,
keep it as-
so I also kind of have fun with this and say what he insures is the dirt. In a sense.
In a sense. And we're the only industry in the world. If you're getting insurance like for your homeowner's insurance, you're saying I'm insuring that the pipes will break in the future. I'm the exact opposite. I will insure exactly how you get your property from the moment you buy it backwards, and say I can tell you everything about that's happened to your property. If something happens further on, like you stop making your payments and you're going to lose your house, you don't have an insurance policy on that. I'll make sure that nobody's going to foreclose on your house before you have it. But what you do after it, that's not part of my insurance policy. It's kind of cool. If I do it right, we should never, ever have a claim. I've been doing it for 25 years. I probably have 20,000 files. I've had 2 claims, and both of them got resolved before we ever had to pay anything. So it's a different kind of insurance.
Thank you, Mike.
Any other questions?
Cool. That's like the stuff that nobody knows. So it's really fun to have someone like Mike to know what he knows and to do what he does. Extremely smart dude. So thank you very much. I want to just quickly, the home inspector, that's where someone comes in, you've got under contract, is the house you want, and one of the conditions of the contract, again, having a good real estate agent, they understand the contract, and they give you lots of outs. So you have a house that's under contract for this price, closing this period of time, you have some due diligence. You make sure you're really qualified for your loan. You make sure that your home will appraise for the certain value it's going to appraise for. You make sure that someone's gone through and inspected it, so there's no lemon type situations going on that, behind the walls, all of a sudden you find out there's lots of repairs that need to be done. These are things that we recommend. In fact, the home inspector we do maybe right after you have a contract. Let's make sure you really want this house and it looks good, okay? And then appraiser. The appraiser is not the same as an inspector. An appraiser actually tells us the value. So he goes out and looks at other homes in the area that have sold in the last usually 6 months, sometimes 12 months. And he says, based on what's happened in the last 6 months, because the market changes that often or more, it's worth about this. So sometimes people say, hey, we had the home appraised last year, can you use it? And the answer is no. It's old, it's expired, it doesn't really have the value anymore because it could be incorrect. 6 months max usually, it's actually 90 days in most situations. After 90 days you need a new one. That's how fast it can change. So that's the team. Now I will add one more thing on this, that I went to a seminar once, kind of like this I guess, and we had a guy come up here, who was all us mortgage guys like me, and his point was, don't tell the client you can do something if you can't. The under-promise, over-deliver situation, which I hope to live by. He said, okay, don't tell your client you can get a loan done in a week. And he said, let's just make sure we have to do. And he took one person at a time. He says, okay, you come up here and represent the real estate agent. And you come up here and represent the title person. You represent the appraiser and the closer and the quality control shipper and blah, blah, blah. There were 39 people lined up in the front of the room to get one transaction done. And the hub of that wheel, by the way, is me and Bree, our office. The real estate agent gives us the contract, the appraiser gives us his appraisal, the title company gives us the title report, and we come and we're supposed to get it all approved, make sure all of it works, and then we can close. And that's the transaction there. So that's the team, and I would want to explain every bit of that as much as you'd want or not. Some people go, that's enough, I'm good. Questions? The home buying process, we've got you every step of the way. Get pre-approved. Oh, we got a hand.
Yeah, I'm sorry.
Can we go back? Can we go back on screen?
I just wanted to add something for first-time home buyers. I think this is really huge to know, is that a lot of these are cost. So you guys have to know when you're going into this what the cost of these things are going to be.
There's a little more out of pocket than
So there's a little out
out
of pocket at the beginning. So for example, an inspection, that is something that you are going to have to pay for, and it can run between $400 and $550 is usually kind of an average number of what it's going to cost. And they're gonna come in, and it kind of depends the add-ons that you have and what you do and the size of the house, all of that depends. But that's kind of a good number to have in your head. The appraisal sometimes is an upfront cost.
500.
Yeah, so there you go. So those are just some things that you want to be aware of when you're going in. So once you put it down, you're gonna have your earnest money, but you also have to have the funds for your inspection, your appraisal, those kinds of things on hand. So
And
I just
there's
thought that was super
There is a
important.
combination of costs, which is around $3,000, called closing costs, to address that. Out of pocket, though, is usually the appraisal and the home inspection. Everything else can, depending on how you negotiate, be part of the contract. So usually, depending on the kind of loan you have, if you can come up with $1,000-ish, and earnest money, by the way, too, you have to put some money towards a contract to say to the seller, hey, I'm serious, here's $500, here's $1,000. So really, that's probably $2,000, which goes towards a credit to your closing at the end. So good point. Good point. Anything else? So get pre-approved, shop for a home. We've talked about that. Come talk to us first. Stay pre-approved. We've had those, gosh darn it, circumstances where people say, hey, Tom said I'm pre-approved, I'm good to go. Oh, I love that new car. I'm going to go buy that new car. You bought a new car. Yeah, it was great. Did you like it? But we're qualifying for a house. That now just added a $300 payment to your debt ratio. You don't qualify anymore. What? I didn't realize that. And that's been maybe my mistake for communication problems. Doesn't happen very often anymore, but Heather.
Along those same lines, when you're getting ready to buy a house and you've saved up your down payment, don't spend that either. Sometimes people get excited when they've got their house and they've got the contract and the loans going and everything, and they go buy new furniture or yeah, don't because then you turn around and you don't have, yeah, and then you won't have your money. So that's something to think about too.
Stay pre-approved.
Yeah.
And then buy your home. Congratulations, you're a homeowner. That's a really short version, but that's kind of a fun one to look at. What lenders look for. So these are our top. These are pretty important things that we would go down details with you guys. Your debt to income ratio. Every industry has acronyms, and we have 1,000 of them. DTI, debt to income. We go off of gross income, not net. So we want to see truly your W-2s and your pay stubs, those kind of numbers. And that's percentage. And each different loan program, some have real leniency, some have a tighter number. And by the way, it's tighter. The more you put down, usually the tighter it is. Those kind of things, kind of back and forth. Down payment, we talked about that. Your credit history, just a little more about that. It isn't just whether you're late or not. It's how much you have. It's also how young or old the credit is. They want to have a history. You don't have to have an old one. I'm just saying the older the credit, the better. If you have any delinquencies, they've been resolved. Those kinds of things. The other thing on credit cards, they want you to have a credit card. Now I know grandma says stay away from them. Well, your credit report wants you to have one because it really shows if you can maintain your credit. But there's certain numbers. They want to make sure that you keep it at about 30% of high credit. So if you have a $1,000 credit limit, they like to see it about $300 or less. Pay it off every month. If you max it out and pay it off, max it out and pay it off, and we pull credit and you've maxed it out, it's going to be a bad score. So you have to know how to not manipulate the system, but know how it works. Usually it's the first of the month that they start updating. So we just want to do those kinds of things. And those are the kind of little teeny things that are huge. In my life, I've learned that small things are big things. And this is one of those, to just come in and say, hey, let's pull your credit, what shows up, and we can actually coach you. And we say, okay, you guys don't have a credit card, or you have one that's only a $300 limit. And so you think that's smart. But that $300 limit, you put $200 on it, and it looks like it's maxed. So there's just little variables. Even though you have $200 of debt, the algorithm says, hey, this guy's maxing out his credit cards. There's some things like that. Assets, that's the cash. Sometimes you need reserves. Sometimes they want the down payment, plus they like to see money in the bank. Depends what kind of loan we get. But that could be your 401k, that can be savings, those kind of things. Liquid assets, by the way. By the way, people say, hey, I've got this lot that my dad gave me, because of the family this or that. That's not good, because actually it's a tax to us, it's a debt. So there's kind of different ways. Liquid assets. Your employment history, we look at 2 years. And people say, what if I changed my job recently? That's okay. If you actually took a job and you went upwards, then that makes sense. So you can actually get a new job and still qualify right away, or even qualify before you start the job. We can actually close a loan with your anticipation of the job, meaning that you have a contract or something to show that it's going to happen. Not just, hey, I hope you get a job. Awesome, let's get you a loan. That's not what I meant. Financial history, bankruptcies, foreclosures, records, those kind of things. So the serious stuff. And again, you can get a loan if you have those things. There's periods of time we have to wait, and you have to actually go and repair some of it. And again, I love when I talk to someone who's been through a bankruptcy pretty recent or foreclosure, because then I can help them through the process. One of my favorite loans took 3 years to finally get done, because they came in and said, oh my goodness, how do I start getting out of this? Great, we met every 6 months. And then they bought their house. That was a really fun day. Fast and easy pre-approval. Documents that I need are usually pay stubs for 30 days, your W-2s for the last 2 years, tax returns. And again, if you're self-employed, any tax returns. If you're not, I don't. Government issued photo ID. You'll need that especially for Mike at the title company to say, yeah, that's really me. It's signing the papers. You're not sending someone in your place. VA, if you have a DD-214 discharge, you have to make sure if you're VA. There's just a lot of those kind of things, but the basic ones are pay stubs, W-2s, bank statements. That's the basic one I tell people. If you have a divorce, I need that full divorce decree signed by the judge. Those kind of things. There's just some things like that. That's good. This is where I really love to sit down and talk, because you're going to see that I'm going to go and say, here's conventional or BRE. Here's conventional, here's FHA, here's Utah Housing, here's Wasatch County Housing Authority, which we offer here in this county. Here's USDA, here's VA, okay? And we have a 1% down product. And I go through and I try and do like a matrix with you. And I say, okay, here's the pluses and minuses, here's the pluses and minuses. We can look at it side by side, and then we compute the payments. And then we show the down payments. Which one is best? Because someone might say, I want the lowest payment possible. Awesome, I need 20% down. I don't have 60 grand. Okay, let's go to plan B. Because actually you can do a pretty good job of it without having to come up with 60 grand. You can actually buy out mortgage insurance. You can do all sorts of things to get that payment where it works. Remember, in my experience, in my way of doing things, a monthly payment is the most important thing. Now we got to make sure how we get there. I want to make sure that monthly payment is the most reasonable price. And I would also add that my personal opinion is if you had 10 grand in the bank and you've saved it, you're excited about it, you've got it for your down payment, my advice, and maybe it's not always everyone's advice, is that if I can keep as much money in that bank for you, because it feels really good to have 10 grand in savings, if I took all your money and then you buy a house, now you got a payment that's higher, that's not necessarily a good thing. So if I can get you a loan and you put 3 or 4 or 5 grand down and keep 5 grand in the bank, a little slush fund, that's what I recommend. But that's your choice, not mine. So I always tell people when I sit down with them, I'm going to share my opinion right now because it's only worth anything if you want it. Otherwise you can throw it in the trash. But I've also learned that people need reference points. They need to hear it from somebody to say, I agree with that, or I disagree with that. And that's fine. Because I tell people, here's where you're at, and I'm going to tell you about this, and I'm going to tell you about this. And we may end up over here, and we end up here, or we might come back. But as long as you understand. An example is this. So we talk about fixed rates, and that's almost always a first-time home buyer. But we have adjustable rates. They kind of change up and down. And I say, do you guys want to talk about adjustable rates? And I have some people go, no, don't want to talk about adjustable rates. And I go, that's fine. I can definitely understand those feelings, but it's my job to educate you. Can I at least show you how they work? And I show it to them in about a third of a minute doing an adjustable rate. Okay, that's just an example. Any questions about USDA, VA, anything you guys have heard? What is FHA? Federal Housing Administration. So what you're going to find. So FHA, VA, USDA, and even conventional loans, they're all government insured. So the government's money actually is what's doing that. Now there's other more private, but veterans, VA, USDA, it's the same thing that does beef, but they have a housing department. But most of the money we get is actually coming from the government. Yeah, so an FHA is the Federal Housing Administration, and then they have a couple different opportunities through that you can do. They have certain rules. There's the most lenient product out there. So if someone's had some bad credit, someone's had something, the debt ratio is a little higher, FHA is usually the one that we can get a loan done.
How does first-time home buying loans work?
So that's a great question. She asked, how do first-time home buyer loans work? So I will tell you, actually, this phrase that we use all the time, a first-time home buyer, was something in the industry about 10-ish years ago. There are no longer any more first-time home buyer products, meaning they open it up to everybody. You don't have to be the first-time home. There used to be rules that say you can't have owned a home in the last 3 years unless you do this. That's now, it's all open to somebody. And actually, it's first-time home buyers or people trying to get back in after, you know, whatever. So it's really open to everybody. But that terminology is to say, hey, I'm a first-time home, I want to learn how this works. So what is a first-time home buyer product? Right there. This talks about a minimum FICO score of a 620. I have one that goes down to a 580. So again, that's leniency for somebody who's got bad credit. FHA can go down to 580, just so you know. Has different scoring models we have to do.
What was the highest?
The highest?
Did you just say 6 something?
I went to the lowest. So get back to credit, and I threw that out there. So the best credit score is 740 and above. And then every 20 points is another tier. And it either increases your rate or disqualifies you for a certain product. So 740, 720, 700, 680, 660, 640, 620, 600, 580. That's the range. Some can have a 780, and that's wonderful. I applaud you, but it's the same as a 740 does. The modeling does go up to 850. Never seen an 850. Maybe on a credit card, but not on the real stuff. So the FICO score is important. FHA, let's talk about 580. You have to have 3.5% down for an FHA loan. But if you go Utah Housing, they actually give you a second mortgage for the down payment. See, there's just a lot of things to do. So those are the kind of questions that I'd want to go one-on-one because, okay, what's your situation? Where are you at? What's your debt ratio? And I look at debt ratio, compare it to down payment, and compare it to credit score, and compare it to these things and say, okay, this is the one, or these are the two that you have to choose from that are best for you. I love to sit down and show, here's how they work, which one, and you can say, well, that one's the one for me, then isn't it? Mm-hmm. It really just explains itself once you have it in front of you. It's a great question, though. You okay? Done this about twice. This is a little more detailed. I'm going to go fast. The loan application, which, by the way, is goapplywithtom.com. It's all automated. In fact, in our situation now, you go to goapplywithtom.com. You go in there, it's about a 15-minute name, address, where you work, where you live, social security number, all that kind of stuff. 2 questions are asked. Hey, could you give Guild Mortgage access to your bank statements? And you say yes, we go get them for you. So they go into our system, and not to bring it to us anymore. Hey, by the way, where do you work? We say, hey, do you give Guild Mortgage access? You say yes. We now, for lots of employers, we can go get the job verification. You don't give us a pay stub anymore. So really, if we went and got that loan application, and then we could say, here's what showed up, here's your debt ratio, here's your credit score, everything. So that's the loan application, but that's when you get pre-approved, pre-qualified. Home inspection, property appraisal, home insurance. By the way, home insurance is about $25 to $50 a month. It's the smaller portion, but critical because it burns down, right? Loan process, underwriting. So that's where, so our job here in our office, just to block down, is to get all the papers corrected, look good, then we send it into underwriting, all automated. An underwriter looks at it and they say, oh, they want an FHA loan with 3.5% down, credit score of this, debt ratio of that. Okay, it looks like they did it, meaning we did our job as an office staff, and they submit an approval back to us and say, yep, you're good to go. And that's what I want sooner than later to get you ready to go. I get approved, at least you, from the underwriter, so that when you find the property, when Mike comes in, we get the appraisal done on the property, because it's 2 sides. I approve you, and I approve the property. If I get you approved with your debt ratio, your down payment, those kind of things, cool. And then once you have that contract, real estate purchase contract from the agents, I then can get the property approved with the appraisal, the title report, and the home inspection, and insurance. And that's usually a weekish, 10-ish days kind of thing, and then we can close. Closing, and then the keys, please. And Mike is the last person you'll actually see. I went to a closing today with Mike, and he sat down there, they signed their lots of papers. There's about that much. And they say, great. And then the money is transferred to everybody, and everyone gets their money, and you get keys, and you move in.
Adding to that, you do not get keys when you sign the paperwork. Sorry.
It's usually, it's usually the next day.
Yeah, so as soon as it records, that's when you get the keys. So some people think they come in, they sign the papers, and they get the
Records
keys.
what, Marianne?
So record is when it's actually recorded with title with the county or the city or whoever.
What's recorded?
The ownership of the
The
deed.
So there's a couple deeds that happen. So there's a lot of papers to sign, but the most important one is what's called a warranty deed. Sometimes it's a quit claim deed, and it literally is the seller signing the bottom line, transferring ownership. It's a 1-page document. By the way, you'd be surprised how simple it is. It's a 1-pager.
Which nowadays it's much quicker, and funding is usually much quicker than it was 3 or 4 years ago.
Usually the same day.
Yeah.
Usually if you close in the morning, you have it funded and
By
recorded that
afternoon.
night.
That afternoon.
You also have to record the deed of trust, which is the document that says I have a loan against it and our interest as a lender is secured by that property and you've signed it. So two things are recorded specifically. The title of ownership is switched and then that you have a lien with the lender against it. Yeah, isn't that cool?
Yeah, just wanted to just
Great point.
get that up.
Stay pre-approved, we've done that. This is my little sales pitch. You know, Gil's been around since 1960. I've done it 26 years, and I've done it mostly in Wasatch County. And I like when I go in the grocery store and I see you, and I say, how's it going? And you tell me it's great.
We see you when we go to the grocery store too.
That's true, I advertise in the grocery store a lot, yeah. I will tell you at Guild, there's a whole difference in mortgage companies too. I mean, this is worth it probably. There's a whole difference in real estate companies too. Not everyone's the same. Let me tell you, for example, if you want to work at Guild as a loan officer, you have to have at least 3 years experience and you have to be doing so many loans a month, otherwise they will not hire you. They don't want new people working there. If it's a new person that does work there, you have to go underneath somebody. Because they don't want people saying, sure, fill out an application, we can get you a loan, when it's the biggest financial decision of your life. And so I love working for my company. Guild is awesome. Of the 24 years, I've worked for them for 5 years now. They've been around since 1960, but only been in Utah pretty much since I started. So I feel pretty blessed to have that situation. The other thing that people really love about Guild is that it's our money. So you still get an FHA loan, but it's funded through Guild, and you make your payment to us. And people like that. So we have a lot more control. Because when you get a loan, what happens is the company's going to have rules, and there's also FHA rules, and there's also VA rules. So if you have already VA and FHA rules, and then the company says also more rules, for example, FHA may say, we don't want your debt ratio more than 45%. Okay, and that's actually more, it's actually like 50, let's just say 45. And then the company says, that's true, but we only want you to be at 40%. And that's a lot of people that don't qualify because their debt ratio is now 40.01, and they don't qualify anymore. Guild has no, we call those overlays. We overlay the rules. So they say, if it fits the box, for generally speaking, we do the loan. We do the loan. So I do more loans than most people. In fact, we do a lot of loans that other people won't. We actually go to the credit unions and the banks and we say, for the people that you've sat down and talked to and they don't qualify, let me look at them a second look. That doesn't mean we do bad loans. It doesn't mean we do people that aren't qualified. It means people that don't fit in their box. And we usually can make it so that between the different variety of loan programs we have and the way we look at it, we try and make a loan work. The second thing about Guild I want to say, remember it's the 10th thing, is that a bank has a mentality of, first and foremost, protect the bank. Guild is owned by private equity, one of the few in the country. Private equity says, do more business, get more business. How do you get more business? You do more loans. And so for that, people can come and talk to me that don't qualify otherwise, or it's a little bit tighter. And again, does that mean I put people in troublesome situations? Absolutely not. I love having that information. But to say, hey, you know what? Nobody's really in the box. So how do you make that work? That's how I would quickly answer why Guild. Questions on that? Thoughts, please.
You mentioned that we make payments to Guild. Is it for the life of the loan?
Well, so do we make payments for the life of the loan? The answer is yes. But I will tell you, because no matter who it is, the big banks, the small banks, whoever it is, you will sign something that says they have a right to transfer if they want to. So the mentality of Guild is to build their portfolio. We have $40 billion in our portfolio right now. Our goal is to have $60 billion by 2021. So we have a mentality to grow it. And that means that you take people's loan amounts, you add them up, and there's $40 billion worth of loans in our servicing portfolio. Pretty good, pretty good. Some of the banks are bigger portfolios than what we have, but as far as private equity, that's a pretty good size. Is there a chance that 20 years from now, there's a different mentality and they sell off $2 billion worth of loans? They could. But that's not our mentality now. So, good question. Other questions on that? Papers to keep after closing. Loan estimate, closing disclosure, your note, deed of trust, appraisal, purchase contract, and homeowner's insurance policy. Those are things that you can say for tax purposes, hey, what's really claimed on my insurance, those kind of things. Please.
So when you go to closing, whoever's closing you at Mike's office will have a folder or a CD, and they'll give you all of those documents. So to have a nice folder with a nice stack, or a CD where you can access those, so you'll have everything right as you leave clothing.
And inevitably, by the way, every November, I get a phone call that says,
Hey,
hey, do you, my taxes, property taxes usually included in your payments, but you get the tax notice in your mail. And people call and say, hey, I got the tax notice. Didn't you tell me it was included in my payment? And they always call me, which I love that because I can have a contact with them. Yes, it's included. And then tax time. Every April, whatever, someone calls and says, where's that document? I need it for my taxes. And so we will also keep those for you.